So welcome back, my dear students. Welcome back, everyone. Welcome back, my dears. Another lecture, a new lecture in the accounting. And this, I believe, will be the fifth lecture. And we will go right now into our new part. Been, I believe, on we've done through all this. We talk about the liabilities, account payable. We'll go today to a new statement that we call it the income statement. But before we go here, I just want to show you since we talk about how is the balance, the balance sheet, and I talked in the previous lecture about the balance sheet, how it looks like. Those are the things which we care about in the balance sheet. So we'll go directly to an example here. If we have current assets like 50,000, account receivable 30,000, inventory 100,000, supplies 15,000, then total current assets will be those together 50,000 plus 30,000 plus 120,000 plus 15,000 will give me the total current assets. If you calculate them, you can do this right now. Just one sec. Copy. Let me go for the calculator. Here we go. 50,000 plus, we have here, the plus is here, plus the second amount is 30,000. Copy. Again, we'll go to the calculator. Then we will say plus 30,000. Edit. Paste. Here. That will equal 80,000 plus 120,000. Copy. Then we'll go to the calculator here right now. Plus, we'll go to the edit. Paste. Here it becomes 120,000. Here 50,000 plus 30,000 plus 120,000 plus 15,000 plus 15,000. No, there's a mistake here. Just let us go do it from the start itself. I'm sorry about that. Let's go from the start itself. It's okay. No worries. Let me do it manually. It's better than just taking copy and paste, because this will make it 50,000. Let me say 50,000 plus 30,000 plus 120,000, 50,000 and 30,000 and 120,000 and 15,000 plus 15,000. That will equals 215,000. That's here. Total current assets equals 215,000. The same amount which you get here, 215 is 215. So that's the meaning of the current assets. How to know the current assets? Like we said, the main aspects, you have to know them. You have to memorize them. But to understand also what you memorize. So it's basically depends on what you own and what can be switched into cash in 360 days. So cash, account receivable, if you sell for people, as example, this is the account receivable. You sold for people with 30,000. You give people goods. You are selling goods, and these goods of 30,000 amount. But they told you we don't have money now. So I said, okay, guys, I will take checks from you. Write for me checks. This we consider it like account receivables. So you will take the checks and put it in your safe box. And once the time comes, you will take it to the bank and switch it again into cash. So as long as these can be switched into cash in the short run, that means it's current assets. It means that it is current assets. Also the inventory, you will keep it in your own stores, but you will sell it. So it's in a figure of goods, but you will sell the goods for 120,000. Then you will switch the inventory into cash. So this is also current assets. And the supplies are the same. Supplies, is 15,000. Once you sold it, or you change it into raw materials, you change it into finished goods and you sold it. So that was the cost was the 15,000. Then in that case, you will get the 15,000 in cash. So here, this is also current assets. So those are the current assets. We add them together to get the total current assets, which was here 215,000, like I showed you, 50,000 plus 30,000 plus 120,000 plus 15,000 will give you 215,000. So this was the current assets. What about the fixed assets? It's the same. But the only problem is how to know the fixed from the current. What will be classified as fixed and what will be classified as current? And I showed you this before. So lands are fixed. Okay, buildings are fixed. Equipments are fixed. Furniture are fixed. Vehicles are fixed. So I can say the total assets will be 200,000. Let's go back here. Clear everything. And this is 200,000, paste. No, I prefer to do it manually. Sorry about that, guys. We'll do it manually, that's better. So here we will say 200,000, 200,000. Just one sec. Again, let's say 200,000 plus. We have 1,100,000. 1,100,000 plus. We have 950,000. 950,000. So 950,000. This is plus 950,000. Plus 225,000. Okay, plus 215,000. That's the vehicles. It will equal to 690,000 here. Okay, so here 2,699,030. That's an amount, the same amount here. Get the same amount which we calculated. So the total fixed assets, like I told you before, is all the amount of the assets which you have. So you have lands, you have buildings, you have equipments, you have furniture, you have vehicles. All these amounts will come to this value. This is about the fixed assets. Liabilities are what you owe the others, what you have to pay for the others, like we said before. In the liabilities, you have loans payables or notes payable, and the amounts also of the liabilities. We have also fixed liabilities, which is long-term liabilities, like I told you before. The account payable is what you have to pay for the people. So as example now, you bought supplies or you bought raw materials, and you have to pay $100,000. But actually, you don't have $100,000 in hand. You don't have it. So you write checks for the people with the amount of the $100,000. You write check, and they will come to ask you to pay the amount in the time due. So let's see, this is example also about the current liabilities. We will find here that the wages payable is 10,000 plus account payable 80,000 plus liabilities 50,000 plus current mortgage 15,000. Total of them, when you add them up together, 10 and 80, 90, 90 and 50, this is 140, 140 and 15, that will comes to 155. Let us do it by the calculator right now again. Let us do it now. Let's calculate it from the start itself and see how the numbers are working, how we will get. But the point is to know how to calculate each of them. Know how to calculate each of them. To know how to calculate what the assets and what is the liabilities, and to know which one will be the asset, which one will be the liability, which one will be the fixed asset, which one will be the current asset, which one will be the fixed liability, which one will be the current liability. That's your turn. So here, let's say 10,000 here, 10,000 plus we have 80,000, 80,000 plus we have also 15,000 other liabilities, 50,000 plus we have 15,000 mortgage, 15,000 as mortgage, 155,000. Here is the amount 155, and here is the amount in the calculator 155,000. So that's how it works in both the cases. Now, before we move to a new part, I would like you to work on these parts to give you an example for the calculate the total current assets and calculate the total current liabilities. I'm not going to change too much, but we will take an example here right now. Let us say I'll just formulate an example for you exercise. We'll change the numbers only, no more, no less. Here we go now in our page here. 8, this is 9. And I will take the example like this, giving the following. But that I will take the whole down here, giving the following. Control and V. Cash will be, let's make the cash 60,000. I'll just change small numbers. Here, this will be 40,000. Here, inventory will be 130,000. Supplies will be 20,000. Okay. And required calculate the total current assets. So here will be an example for you guys. This is the first example today. We'll go through it, then we will go to the second example once we solve this one. Once we solve this one, we'll go to the second example. This is the required here. Giving the following data, here it is. Let us take some dots from here like that way and put it here. I'll stop here for around 5 minutes to get your answers, my dears. Then before we move to the next lecture. Thank you so much for this question. Then we will go to the liabilities also to train ourselves on how to do the liabilities as we did the assets. Thank you. So let's go for the solution of this now. Total current assets will equal Control and C. And here I'll put the answer here. I'll put the answer here. Control and V. Total current assets will equal the cash is 60,000. Cash is 60,000. Control and C. plus the only tricky thing here, account receivables 40,000 plus the inventory is 130,000 plus supplies is 20,000. The total will equal 60 and 40. This is 100, 130, 230, and 50,000. This will be 250,000. 250,000. Of course, dollars, the sign of the dollar. This is dollars, Control and C. So this will be in dollars as well. Be 250,000. And I can do it here down if you want. So that will be, and I can put also the mark here. So that it will be, 60 and 40, this is 100, 130, 230, and 20 will give me 250. So that is regarding the question of the assets. How to calculate also the liabilities. That's what we will do right now. So we'll go now for the question, question number 10. But this time, Control and C, Control and V, giving the following, and I will get back to my slides here, the slides, and go for the current liabilities. Let's say here, current liabilities, wages payable. Let's take this example. And we will change just a little bit in it, in the numbers, and you guys will do it. You will do it. Then after you do it, I will keep, so you will work on it for some time. Then I will help you as well in answering the question, so that we'll make sure that we are going on the right path. So here, giving the following: wages payable, let me make it 20,000. Account payable, let me make it 90,000. Other liabilities, let me make it 60,000. And let's say this accrued expenses. Let's say this is accrued expenses. So other liabilities, let me call it accrued expenses. Which means what? It means that this money, you have to pay it for people who did work for you. Like I told you before, if the plumber come to work in your apartment or in the company's washroom, and he was fixing something in the washrooms, and you told him, please come next week because I don't have money now, this we call it accrued expenses. Here, let me make it 70,000. And a current mortgage, let me make it 25,000. It's the same thing like other. So calculate what? The total current liabilities. I will take this sentence and say required like this way, Control and C. And I will take here and say Control and V. But now this time is current liabilities. So what you will do? Same what you did here. On the previous one, you will add them up. You will add 20,000 plus 90,000 plus 70,000 plus 25,000. The only tricky thing here that I might put for you mixed in between current liabilities and current assets. So in that case, you have to isolate the current liabilities and isolate the current assets, each one apart, each one of them alone, not both of them in the same place. So you will put the current liabilities with the current liabilities, and you will put the current assets with the current assets. You will tell me then how I will know this, how I will know the current assets from the current liabilities. Like I told you, put in front of you any balance sheet and know what is here and what is here. And I helped you also to memorize them here and the criteria. The criteria, is it something that I owned, and this is asset. Is this something of obligation? This is liabilities. This is the So here is the assets, and this is the current liabilities. And I will give you around 5 minutes here to work on this question. Then we will move forward. I'll give you around 5 minutes, then we'll move forward for the answer. Thank you. So sorry about that. Like we said here, how to calculate it. Like we said here, how to calculate it. We have here the wages. So I would say total current liabilities, Control and C. Here we go. Will equals, I will take this amount, 20,000. Control and C here. Control and V plus the second amount, which is the 90,000. Here we go. Control and C, and here Control and V plus accurate expenses 70,000. Here we go. 70,000. Control and C, and here is Control and V plus the mortgage is 25,000. Here it is. Control and C, and here Control and V. Then this is 20,000 plus 90,000, 110, 180, and 225. This is 205,000. 205,000. And let us do it with the calculator. Sorry about that. 205,000. 5,000. And here I will put it down. And this is the results in dollars. Control and C. When we add them up together, that will be the 20,000 plus 90,000. This is 110. Let's do it with the calculator. It's more better to do it with the calculator. So everybody will be convinced with the results. So here 20,000, 2000 plus here we have plus account payable 90,000, 9, 1, 2, 3, 4 plus 70,000, 7, 1, 2, 3, 4 plus 2, 5, 2, 5, 1, 2, 3. That will equals, see, 205,000, exactly like our same results here. 205,000. 205. So this is, we had today an example about the total, how to calculate the total current assets, how to calculate the total current liabilities. Shall see you in the next lecture. Stay safe, everyone. Have a very wonderful day. Bye bye, my dears. Bye bye.